Hey everyone, in this video we're going to be going through 6 inflation-resistant companies that are trading on the Toronto Stock Exchange. It'll be a good video to go through, especially in times like we're in right now. Now, before getting into the video, if you haven't yet, please subscribe to the channel. We're still a small channel, so it really helps out a lot. And also, if you can just give the video a big thumbs up, it really helps with the YouTube algorithm and get this video shown to more people, get more exposure to the channel, so I'd really appreciate that. And if you have any thoughts on any of these stocks or other stocks, would love to hear from you in the comments as well. Okay, so before going into these 6 stocks, something that's interesting around inflation and how it impacts the stock market is just because you have companies that operationally won't really be impacted by inflation and consumers being more penny pinched, sometimes the stocks are impacted in different ways, not on how much money the underlying company's making, but for companies that have earnings that are farther out into the future, the net present value of those future cash flows goes down in value, so the stocks may go down. So it's lots of cases where there's companies that perform okay during inflationary times or extended inflationary periods, but their stock price actually gets hit. But on these stocks, even if some of that happened, if you're holding for the long term, these are typically the type of stocks that, once inflation corrects, interest rates correct more to normal levels, they can really go on a run because the underlying operation of the business has always been strong and not cyclical. So just keep that in mind. Don't get freaked out if inflation is crushing valuations and multiples. As long as the underlying businesses are holding true, you should be good in the long run. At least that's my opinion on that. So going into 6 companies that I think would not be impacted too much by inflation. The first one is Dental Corp. So Dental Corp is a company that's essentially acquiring dentist clinics across Canada, trying to scale, implement technology, synergize them together. And it's a company that hasn't been public for too long. Went public for about $14 2 years ago. And since then, similar to what we were talking about a minute ago, the stock's gotten hit mostly just because interest rates have gone up and this company is still kind of figuring out their profitability. They make some cash flows and EBITDA, but I don't think they're net income positive yet since they're still investing, acquiring new clinics, so on and so forth. So because of that, the value of the company has gone down almost 40% since the IPO with interest rates going up. But with that being said, dentists and everything health related tends to be less cyclical, and regardless of if inflation puts us into a recession or just more penny pinched, lots of people in Canada that frequent the dentist either have government programs or insurance programs that cover the majority of the cost, and I don't believe that they would be too highly impacted the same way a normal discretionary staple or discretionary good company would be during a recession. So I think Dental Corp is a good business and a good industry to be in during recessionary times. Have some information here on them, just on their vision of the future. So if you believe in the vision and what they're kind of doing here by trying to scale across their business in different ways, from a technology point of view, from a bricks and mortar point of view, from a network point of view, I wouldn't let any dip in the share price behind inflation and higher interest rates scare you. It could be a good long-term opportunity. The second stock that I think would do well in an inflationary time is Boyd Group Services. So Boyd Group Services, to give you a bit of background on this company, they are a leader in the auto repair category in North America. So they do lots of auto glass repairs. I think they also do like oil changes and stuff like that. And this is a company that obviously, when it comes to like car crashes, collisions, stuff like that, it's still going to happen during a recession. And it's still going to be the economically sound choice to repair a car repair your windshield versus going out and getting a new car, for instance. You can also see here over 90% of their revenue comes from insurance companies. So obviously premiums go up when you use your insurance and stuff like that, but generally it's not the consumer that needs to make the decision like to spend $5,000 repairing their car from a collision or not having a car. It's generally the insurance companies that are taking the immediate hit on that. So that also makes this a bit more defensive as well, given where their revenue is coming from. Another interesting thing about this company, super well diversified. You can kind of see here, primarily a US company now, given just the size of that market. Also plays across the country in Canada, across most of the states in the US. So big business across collision, glass, everything else to do with auto services, I believe, and very well diversified. Over 90% of revenue coming from insurance companies, and is in a segment of the economy that is going to continue to have demand. People will continue to get in car crashes, unfortunately, or need just repairs with time. So this is a good company if you're looking for a company that's not going to have demand fall off a cliff in inflationary times. This is a good company for that. With that being said, the stock's rallied behind that, has been performing really well over the last year. So keep the valuation in mind. I'm more talking about the underlying business is probably set up for success no matter what the economic climate is in. The third stock we're going to get into today is A&W. A&W Revenue Royalties Income Fund. So a couple reasons I like this one as an inflation hedge, or not, I don't want to say hedge, but inflation resistant point of view. First of all, they only take from top line royalties. So if inflation's driving up rent prices, driving up food costs, driving up employee costs, so on and so forth, it really doesn't impact their P&L. They're just taking 3 or 4% from the top line sales and distributing it out to the shareholders of the trademarks, which is what buying aw.un ticker would have you owning. The second component of this is, aside from just the operational aspect, from a demand point of view and just where this kind of business sits in the economy, as people may be more resistant to going out and spending $100 on an expensive dinner, more volume will likely go down to fast food restaurants, quick service restaurants, stuff like that. And that's where A&W plays. So I also think, in addition to just operationally being set up to weather inflation very well, their business is also in a spot that I think will benefit from the consumer being a bit more careful with their dollar. So this is a company that I like in an inflationary environment, pays over a 5% dividend yield too. So it's really paying you back a good return just from the dividend to make you feel like you're getting something back on your money every month. So this is one that I own and I like no matter what the economic climate is. Going on to stock number 4, Premium Brands Holdings Corp. So this company is a business that holds a lot of food brands. We can look here, just the type of businesses, the type of food that they play in, but it's pretty diversified when you look at where they play and who they play with. So at the end of the day, everyone has to eat food, and in times of high inflation and people maybe being a bit more careful with their money, there'll obviously be different levels to that. Like maybe people who are buying good food at grocery stores will go down and be buying craft dinner instead. But generally, I feel like more people are going to be buying food at the grocery store to make it themselves instead of going out because it's expensive to go out. And I think premium brands will benefit from that. And even if they do have some cost input increases behind inflation, I think they're positioned for top line growth to offset that. So I just think that they play in a place that their food is not like in declining categories like canned food or stuff like that, unhealthy food for the most part. So I feel like their business is well positioned to weather inflation, probably have pricing power, also not have a big hit in demand, especially with more people going to grocery stores to try to save money versus the alternative. So this is the fourth stock that I think, or the fourth company that I think would hold its own in an inflationary time. The fifth company is Dollarama. More people looking for not grocery stores rather, but places to shop that they can get good deals on, they can get low price points on, and Dollarama is exactly that. So everything in the store is $5 or less. They play in lots of the same categories and offer lots of the same products as the other grocery stores. I was going to say the larger grocery stores, but guys, like Dollarama is a $22 billion company. That's significantly larger than Sobeys or any other retailer in Canada, with the exception of Loblaw and who owns Shoppers Drug Mart as well. So this is a big business, and they've been growing really well over the last number of years, despite everything going on. We've really seen people prioritize value, and I think that's going to continue or will continue in a time of extended inflation. And this is a stock, while it trades at an expensive multiple, their business is really well set up for the next number of years. So that's number 5. And then the final stock number 6, is Pizza Royalty. Very similar thesis here to A&W. I'd say Pizza has a longer history, and I believe in prior times, call it like 2008, stuff like that, where people had less money in their pockets, pizza actually increased in sales because it's a cheap way to feed a large number of people, and it's just such a staple for that need case or use case rather. Instead of buying an expensive catering or whatever it may be, you can just order a bunch of pizzas. People can go in for a quick bite to eat, and it's much cheaper than going and buying lunch somewhere else. So I won't repeat it, but essentially everything I said about A&W and why I think A&W Royalty is a great stock to own during an inflationary time, I think the same thing is true for Pizza. And just over the last year, worth noting, this company, despite inflation over the last couple of years, has still been increasing same-store sales, has been adding new stores to the royalty pool. 45 new stores opened last year, and even increased the dividend because the cash flows have been so good from the royalties since the business has been strong. So while lots of other businesses have been struggling, these types of businesses are really holding their own, and essentially flat over the last 1 year, paying over 6% dividend, much better return than you've gotten in the rest of the market. And I think in a time that interest rates may keep going up, inflation may be persistent, I expect that to continue over, the next year or so. So that's my opinion on these stocks. I think every one of these stocks could play a role in a portfolio. The only ones I own personally are A&W and Pizza Royalty, because I like the cash flow. I think they're defensive in nature, and I think they have, limited downside since it's just on top line revenue. And over time, they tend to, go upwards with pricing and other things. So I think all of these stocks could have a role in a portfolio. I think Boyd Group's particularly an interesting company I may want to look into a bit more, see what their real valuation is and so on. But I just thought it would be good to make a video like this when we're in times like we are right now, inflation for the second year in a row at very high levels, interest rates keep going up. So maybe depending on how large or how many stocks you have in your portfolio, you may want to consider looking into one or more of these stocks a bit more. Hope you enjoyed this video. Hope you got some education or some value out of it. And if you liked the video, please subscribe to the channel. Give me a thumbs up. Let me know in the comments. I'd love to hear from you guys. And I'll see you guys in the next one.